All right, live images of the just concluded Monetary Policy Committee meeting at the Central Bank of Nigeria. We just heard from Central Bank Governor Godwin Emefiele. There he is putting his mask on. He's done for the day. Big news. There's the breaking news there at the bottom of your screen. Banks are now mandated by the Central Bank of Nigeria to sell foreign exchange to customers. How about that? Eyes are wide open. Let the camera get my eyes wide. There it is here. Wide open. It's a global business report. Rhoda Sodiri here. You're just seeing live images there. Central Bank Governor Godwin Emefiele. Big news. The Central Bank has banned FX sales to Bureau de Change BDCs. Central Bank Governor said there were about a little over 5,000, about 7,500 BDCs. No more FX sales due to infractions that the Central Bank is going to be investigating, with banks being involved, NGOs being involved. They want to put an end to all that once again. And that was supposed to be the headline for today. The headline was supposed to be the MPC was maintaining rates. Ibukun Omoyeni is with us, Vetiva Capital Economist. Ibukun, what do you make? We look at our notes. We've got a whole bunch of notes we've been taking for the last hour.
Interesting. We preempted that there will be a decision as regards FX.
Yeah.
And interestingly, the fact that we have seen a large number of BDCs operating, there should be a moderation when it comes to the parallel market rate. But instead, the CBN is increasing supply and you have more licensed BDCs, but yet the yield keeps depreciating. And when you see the Naira at 500 and 400 thereabouts, that's, looking at the past 5 years, that's a resistance level. So the CBN does not like to see the Naira at that level in the parallel market. But with this move, we actually expect to see a short-term negative impact because withdrawing the BDCs from the market during the time by which we have the banks come into play, there's going to be a short-term negative impact on the parallel market rate.
Now, that negative impact you're talking about is because of supply, the issue of supply, right? The central bank governor did say that we can now get FX from the banks. And of course, already, just for our viewers, I mean, personal travel allowance, business travel allowance, school fees, medical, so on, bills and so on, you can get from the official window. There's a limit, there's a cap, but now they're saying that the banks should provide FX to everyone. Ibukun, are they going to be able, do you think, to meet that demand? Because there could be a surge to everybody lining up to go to their banks to try and get this. So how do you think that's going to work? Is that part of the negative impact you're talking about in the short term?
Well, in the short run, I'm referring to the parallel market rates because definitely the rates we know, the rates we know in the markets currently are collated on the street. So those that are on the street still have some dollars still left with them, so they want to sell that at a higher rate. So that's the short-term negative impact. But for banks, what we expect to see that, given the fact that many banks have they've highly integrated their payment system with phone, mobile apps and the likes, we could see more innovative solutions to provide FX to users. So I believe the banks will be able to take up the responsibility. However, there could be a lot of pressure in the short term.
Let me run through this list again just for our viewers. Central MPC, of course, Central Bank, stopping sales of FX to BDCs. No more new BDC licenses. We'll start selling prior BDC funds to commercial banks. Banks are to create outlets at all branches for sale of FX to the public. So if you're watching, with documentation, let's talk about that. The documentation. The central bank governor did say that you have to, just like you would with personal travel allowance and business travel allowance and everything else. The documentation is that to the end of tracking to make sure that there are legitimate needs for the FX you would need from your bank?
Definitely, because the bank is still trying to find out what exactly is FX being used for. So that would find a way to curb arbitrage and other activities that have led to a depreciation in the parallel market rate. Because when you look at it, essentially, the Naira is overvalued in the parallel market. The fair value of the Naira should be around 440 Naira to the dollar. Yep. So while it is undervalued in the parallel market, it's overvalued in the INE window. But when you have the Naira breaching 500 Naira levels, it's a level that we don't want to see.
Let me go over that list again. I just remember the documentation. That's why this is huge. Okay, one more time, ladies and gentlemen. Stop sales to FX to BDCs. No more new BDC licenses. We'll start selling prior BDC funds to commercial banks. Banks to create outlets at all branches for sale of FX to the public. And then here's the kicker here. Reports to the CBN if you can't get retail FX from your banks. That's also another, and I think you gave out an email address as well. Ibukun, we've been here before. We were just, as we were going through this, 2017, or it was late 2016, the central bank did make this announcement. As we can see, that wasn't maintained. Do you think that this time will be different, or will we revert back to status quo?
I think the CBN is really being mandatory. Like the move is coming really mandatory at this point in time, and the CBN is more serious about it. Considering the fact that there's been an increase in applications for BDC licenses. So we actually expect some changes in the FX system such that they can track, they can get data to see what exactly is FX being used for.
Right.
And that way they can make decision to carve out a system where the way they change operators could probably generate a more reasonable margin rather than the exploitative margins which some of them have been enjoying, which has really led to an increase in applications for the licenses in the first place.
And he said
so
that.
With that move, they're trying to just get data to see what are people using FX for.
Right.
And at the end of the day, we believe that there will be more clarity on why this decision is actually being taken at this point in time.
Ibukun, you know what? Would we, as far as this, there's the argument. There's also the narrative being put forward, of course, that this is dollar rationing, right? In fact, that back in 2016, that was our prior recession. We just came out of one last year. So this moves. It's a pattern, right? Would all this be solved if Nigeria's FX revenue was diversified and we were selling more than just the bulk of which is oil, and then which would not then put the central bank under the kind of pressure that it's under now to where it has to make this type of moves? Is that the solution to all this? If anyone's watching at home wondering when these type of occurrences when there are no more FX announcements back and forth, is that the answer?
Definitely. Well, two things. We need to both diversify our exports and we need to substitute our imports. Because we've discovered that a lot of money is being spent on machineries, petroleum and the likes, petroleum products. So once you diversify your export, you have more revenue. Once you substitute imports with local production, then you have less demand for FX like externally, and that actually improves your reserve position. What we've seen recently is that although reserves declined significantly in the first half of the year, but in the second half of the year, we've seen a recent accretion in reserves recently. And we believe, although this measure looks like a rationing measure, but I believe the CBN is trying to tackle FX head-on by getting data and analyzing it to ensure that there is a better management of course, price management in the economy, because FX is linked to inflation. We see that imported food inflation is around 17%.
Yeah.
And once you have imported food inflation rising, that tells you that the FX pressures are there. So the CBN is trying to curtail those measures by putting in place this particular measure. But if you look at the reserves, right, one of the key drivers of the decline in the foreign reserves was low demand from India. And all over the world now.
Just for our viewers, that's oil demand from India,
demand,
correct?
yeah.
Right, carry on.
So if you look all over the world now, what is actually gaining ground is the Delta variant. And this Delta variant emerged in India, and it was propagated in February when there was a religious and political festival. So that actually propagated the virus, and because of that, demand from India dropped. So that affected the demand for Nigerian crude, and there was a report in April that our oil export actually fell by over 90% thereabout, and this is actually leading to a decline in the reserves. But with the recent recovery, we are seeing reserves tick up a bit. And also considering the fact that later in the year, we're going to be seeing some Eurobond inflows. There are news circulating around that maybe 2.5 billion to 3 billion. So that will actually improve FX availability in the economy. So we believe that the measure is more long-term, and it's not just a short-term rationing effort, even though it looks like one. But we believe that these are measures the CBN is trying to put in place to get a better FX determination system for the Naira. Fantastic.
But as you know, there's two halves to this coin. There's the monetary side and there's the fiscal side. With all the the long-term gain, the strategizing, there is still the need for the fiscal side to provide some support. Because look, I mean, this is the breaking news here, but there's so much that he talked about. They asked him about all the interventions. He talked about supplying maize to the market. That's what to try and support prices. That's agriculture. They asked him about the healthcare intervention. He was asked about Infraco. He made a joke there about processes and how you have to wait for things to work out. How he was reminded that Infraco was going to float in the third quarter, and he was reminded it is July. We're going into August. So agriculture, healthcare, infrastructure, all these things, Ibukun, they're still there's still the fiscal side that needs to do something in order to release pressure from the central bank. Is there not? We still need that. Do we? Don't know.
Definitely, we need the fiscal side to actually support, and the support from the fiscal side will be more of reforms, right? Laws and policies that will engender investment in several sectors of the economy. So we recently saw the passage of the Petroleum Industry Bill. While it looks as if it's quite late, considering the fact that there is more attention to global warming issues currently than it was 5 years ago or 10 years ago, or even when the bill was being initiated. But the federal government has to introduce reforms across several sectors in order to engender investments in those sectors, right? There are a lot of money that are being placed in bank accounts at negative interest rates abroad, right? But these funds are looking for places to actually sit. And if we can provide the right reforms that would attract those investments, then we could see the fiscal sector contributing to growth within the economy in that regard.
We spent so much time on the breaking news. Let's actually get back to what we intended to discuss very quickly. A couple of minutes. I think let's put the rates back up. So again, for folks that are wondering, this really wasn't about the FX. That was the big news here. The actual news was the fact that the central bank maintained all rates, 11.5% MPR, liquidity ratio 30%. There it is. Yeah, there's it for our viewers. So all rates held constant. Ibukun, no surprise here. You actually, along with other analysts, said that this was going to be. So let's get back to this quickly. Parameters with respect, metrics, reasons why the MPC decided to hold all rates constant.
Okay, so for looking at the growth metrics, starting with the GDP, we discovered that Nigeria's GDP grew by about half a percentage point in Q1 2021. And looking at the PMI data, although it is still below 50 points, but there's been recovery in PMI, so that points to growth. And if you look at it more closely, you discover that the second quarter and the third quarter of the year are the quarters where Nigeria can record the strongest growth, because that was, looking at the prior year, the base effect is quite strong. In Q2, as at 31st of March, there was a lockdown, and it lasted throughout April, May, and June. We just had gradual recovery. It was also extended. So in Q2, we expect to see significant growth. We're looking at about minimum of 4.5% at Vetiva, but we believe this growth is not necessarily due to interventions. It's also due to intervention, but it's majorly driven by the base effect. The economy is being reopened, transportation, road transportation, air transport. The businesses are being reopened. So that's actually going to affect growth, right? So also looking at the fact that inflation, on the other hand, because that's growth. So looking at inflation started decelerating, right? So it fell from 17.93% to 17.75% recently. Yeah. And that actually points to the fact that the base effects from last year's adjustment in PMS prices and adjustment of the currency is currently taking effect, right? So that base effect is actually moderating, and that's why you are seeing inflation moderate. So once inflation is moderating and you are seeing prospects for growth or recovery, there's actually no point you trying to move the rates, because if you hike the rates, that sends a negative signal to businesses which are just trying to recover. They'll be faced with high cost of credit. On the other hand, if you reduce the rates, that sends a negative signal to investors, which are looking for attractive places to keep their funds, considering the fact that the FX situation is already in minus sign for the Nigerian environment. So reducing the rate is not an option at this point in time. What the CBN can just do is to maintain the rate, then influence the yield environment using its OMO measures, or probably using the discretionary CRR measures to tighten liquidity. Then you look, on the other hand, it can actually just maintain its interventions in several sectors by doling out to the agricultural, manufacturing, and health sectors in order to boost output in all those sectors.
You just mentioned base effect, and you mentioned the lockdown. When are we going to get Q2 GDP figures? August? Middle of August around?
Yes, August. By August, we should get it. Between the middle and the end, we should have the August numbers out for GDP.
All right, so 0.1% Q4 2020, 0.5 Q1 2021. What are you looking at for Q2 for the Nigerian economy? What do you think? Okay,
so at Vetiva, we see a modest 4.5% recovery.
4.5?
4.5%.
Okay.
We are looking at the fact that in Q2 2020, the GDP contracted by 6.1%. And that was driven majorly by the contraction in both the oil and the non-oil sector.
Right.
But the non-oil sector is currently recovering. The only issue we have currently is the oil sector, because of course, the problem with India, and as well as India is our major trade partner. So the Delta variant that resumed in that place actually affected oil exports, as well as the OPEC production cut, which has affected oil production. So that's why we don't expect the country to recover by as much as 6%.
Right.
So 4.5% is our estimate. Looking also at the ICT sector, considering the fact that there were restrictions regarding the NIN-SIM linkage issues. So we actually expect a slower growth in the ICT sector. For many other sectors, the manufacturing sector has actually been a beneficiary of CBN's intervention. We saw that it's expanded by about 3.4%
in Q1,
driven by the food, beverage, and tobacco segment, which expanded by about 7.11%. And that's a defensive sector. We saw that the food, beverage sector is a sector where, as the economy reopens, people tend to demand for more things, and definitely it grows. Given the fact that many of these manufacturers have, they've carried a lot of innovation by providing smaller packages. So instead of having a bulk product, you're having smaller packages. So that helps to drive growth.
Ibukun Omoyeni, Economist with Vetiva Capital. Thank you so much for joining us. Big day. Big day coming from the Central Bank of Nigeria. Really appreciate your insights. Thank you so much. And we'll see what happens in Q2 GDP. That 4.5% figure comes by Ibukun Omoyeni.